We are finally back with another trade recap, and today I'm going over how I was able to catch this easy continuation using my continuation model trading strategy. So, hope you guys do enjoy the rest of today's video. I took this trade on gold here, as you can see, and this is just a continuation of this trend on the right. All I'm doing is following this trend on the right here to go lower and going through a session low and to eventually pre-stay low. So, if we start on the higher time frame and go over what I was seeing on this day. If we go back in time real quick, go in the 30-minute, you can clearly see what happened here. So this loads up here, waiting for my daily bias indicator here. All right, so initially on the higher time frame, I was bullish. We have this inducement here taken out off this wick here, tapped into 4-hour demand. I know you guys know we're at all-time highs. We should be expanding higher. The first sign of the market kind of shifting direction here was that the fact that even though we did basically this liquidity sweep here and tapping into 4-hour demand, the fact that we came all the way back down here was the first red flag to me of price wanting to go higher. This is lower probability for price to go higher if it wants to come back. Again, this can be a mitigation cycle, or what people call retracement. I like to call it a mitigation cycle because the mitigation is just to come back to fill more orders at this demand zone to then push price higher. But that was the first sign of weakness here for me, especially after a liquidity sweep. It's definitely lower probability. But the main thing here was that we had this demand here that did not make a new high. So we have this demand here, and this trade here is off of something on the left here. You have this unmitigated PY here that we got tapped into during A session. I believe I was not up during this time to trade A session, or I think I might have been trading NQ at the time, so I wasn't looking at gold. Didn't have my alerts set, but anyway, point is we have this demand here, and we created an OBNG model here to go to the upside. But look what happened here. We failed to make a new high here. So we failed to make a new high here, and that's okay. We come back for another mitigation cycle. This mitigation cycle also failed. All right. So this mitigation cycle failed here. So the fact that this mitigation cycle fails there, and if we go for this low, this means, or this confirms here essentially, this is a FBOS. This is your FBOS. Why? Because not only did we not make a new high at the first attempt here, we also didn't make a new high when we came back to retrace. And so instead of that, we took out the low, which confirmed this as a failed break structure to us to basically go lower. So this is a signature in price here. Essentially, that's going on. It's a bearish trend. So now I'm just looking to follow this bearish trend. We have this liquidity sweep here. Since we failed, obviously, the mitigation cycle here. Honestly, you could have been bearish before we even took out a session low here. If you see that we failed to hold this demand origin here, please right here, let's see. Yeah, so we failed once, twice. We failed so many times here. Like, again, make sure to not spam entry models. Some of you guys are spamming entry models, and that's not helping your trading. Matter of fact, that's holding you back. Give yourself 2 attempts max per PY. That's it. Yes, sometimes we will get maybe another sweep, but that's super, super rare. Majority of times, this is an easy failure. So by this point in time, you could have looked for setups here, maybe to go to the downside here. We have a liquidity sweep here because this high made this new low, and basically price went lower. So you could have taken a setup here. I believe I wasn't on the charts at the time, but there's an IFG and an OBNG model setup here, and you could have easily targeted either, again, the next low here, which is safe, or even a session low, which is also pretty safe. Both of these targets are fine, in my opinion. Again, just keep in mind, whenever we take out a low near another low, like this low is near this low, sometimes price can react to this low here on the right, come back, and then go for that final target. Here's a pretty clear example. Like, for example, this low here, even though it didn't do anything, it is still a low. And you can clearly see once we took out that low, even though we didn't take out this low yet, price immediately responded and reacted off of just this low. So people that are trying to maybe look for continuations, probably not a great idea to look for something internal here. Maybe better to be more patient and wait for a liquidity sweep or some type of PY back in basically 50%. Okay. So you could have taken that, being more selective on your trading, but there's a OBNG model here for 8-9RR towards this next low. But once you took an A session low, I was still looking for shorts, to be honest here. Obviously, it does make my short here a little bit lower probability, because we already took out a session low. However, one good thing about my trade here is that since we already had liquidity taken earlier, this high should be protected. It should be a strong high because we made a new low and we took out a high. So ideally, price should not violate this high here and go lower. So that's what price did here. And basically, I use my IFVG 50% retracement entry model, which I teach you guys within the course content. It is within the new 2026 modules, so make sure to check that out within the first section in there in the WAP. But yeah, basically waited for that 50% retracement, limit order there, and took it. Again, you could have waited for the OBH model if you want to. Otherwise, you could take the IFVG. But to me, IFVG was 2RR, and I guess you could have used aggressive stop loss here, and you would have been fine here too. It would be something like this. You can get 3RR out of this, but I didn't mind waiting to see if I can get a retracement here with the 50% to get a better RR. If I miss this trade, it is what it is. I'm sure there might be other ways I can enter a setup, right? There's another OB here. There's another OB here. So even if you miss this setup here initially, you had multiple other times to enter this trade. And I even saw, I sent this draw liquidity out again, by the way, this trade idea to the group chat. So if you were in the setup and you saw that I sent out the setup to chat, hopefully you guys were able to catch it in time. I did see one of the members here. Here's a screenshot from Discord. Again, you get access to this private trading Discord if you get the course or mentorship. But essentially, yeah, he was able to take this setup here. As you can see, let me make this so it's probably clear to see. But you see he took this setup here, and he just basically waited for a retracement here with the video here of his entry to take this short. So yeah, it seems like he got about 10 RR when the mentorship students off this trade. So he got an even better entry than me. I believe he took a OB entry model off of this instead of the one I took. But nonetheless, still amazing trade. Like even if you miss this initial trade entry here, like I said, just be patient. So if you hide the indicator real quick, if you're patient, you could have taken this here. There's another OB retracement. Now, again, in my opinion, here, since price already came back to 50% of the previous range here, it's not as ideal to have your limit order set here. The more ideal situation, this is not really a valid OB entry model, if that makes sense anymore. You would be waiting for confirmation of some sort, another entry model. There's, like I said, there's IFVG here. You could have taken this. Again, you wouldn't have not have gotten stopped out because I tell you guys, don't put your stop loss at the high. Give it a few ticks of wiggle room because stuff like this does tend to happen. And sometimes even you get unlucky because micros and minis sometimes has a divergence where one of them might make a tick or two or a few ticks above or below the higher low. And that would be completely just pure luck at that point, whether or not you get stopped out. So remember, always give your stop loss at least some wiggle room. No matter what you do. And yeah, could have got nice 3RR trade here, or I guess there's an impulse model here, about 5RR. There's a lot of different ways you could enter. You could also enter it with, again, if you just want to use a limit order, don't confuse this with the OB entry model. This is not an OB entry model, guys. This is a limit order. You're not getting any confirmation here. This is a 1 range, 2 range, 3 ranges. So this would be where you would use your limit order entry model. Your OB entry model is if it happened up here before we came back to 50% of this range here. But this is a high probability limit order entry. And the reason why is pretty clear. I mean, there's no demand here. Everything is fully mitigated here. The only demand that was unmitigated was here, and that failed. All right, that failed. And we're also, again, bearish. So trade with the trend and you should easily be able to catch these winning trades here. It should not be difficult at all. So that is basically my trade recap, going over how I was able to catch this nice 5-hour trade on gold. Hope you guys do enjoy today's recap and learn a lot from today's video. If you guys want me to post more free content on YouTube, leave a like on the videos to show me some support. And I'll catch y'all in a Discord.